think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies. I'm your host, Daryl Thomas, and today you are in for a treat. You are receiving exclusive content from the New Orleans Investment Conference. I had the opportunity of interviewing multiple experts within their respective field in the finance and resource sector. So be sure to hit the subscribe button. Take a look at this statistic. Over 91% of people that have watched my channel over its lifetime have not subscribed. So hitting the subscribe button only takes a second, and it is free to you. And for me, when I put out this content, it costs me money and time. So I hope that you all understand that and hope that you consider hitting the subscribe button. So without further ado, let's get to the interview. Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today I have Dominic Frisby with me. Just heard him speak at the New Orleans Investment Conference, as well as other times I've seen you on different podcast appearances and such, and just really enjoy your perspective and the clarity in how you communicate what investors should be considering in their portfolios and such. And so how are you doing today?
I'm doing very well, thanks. I love being in New Orleans. Americans are so friendly, and I love being here.
You said we're so friendly.
Yeah.
Yeah. What's the difference? What do you feel is the difference?
Well, so after I did my talk today, people would just come up to me and they just kind of look you in the eye and they go, "Thank you. You did it."
Yeah.
And in England, they might kind of look at you and smile, or they might go, "Good talk" or something, but nobody would say thank you.
Yeah. Gotcha.
And so there's a appreciation and a gratitude here that
Mm-hmm. Yeah, I have some roots in England, so I'm hoping to travel there someday, just through my ancestry DNA. And such. Yeah.
What kind of roots?
Let's see. I think Irish. I think I have a little bit of Scotland and northwestern England or something like that. So yeah,
right.
It's a lot to discover about our identities and stuff.
Yeah, it wasn't Obama was Irish, wasn't he? He said Obama was Irish.
Yeah.
But yeah.
Yeah, definitely.
So what have you done one of those DNA tests?
Yeah.
And what's your provenance?
So mostly Nigerian, Western Africa.
Yeah.
I have some tribal from Americas, indigenous Americas.
Okay.
And then mostly England and Swedish. So.
Oh wow.
Yeah. So
it's
pretty
interesting.
And
do you know how far back that goes? Would that be like? Would that go back to like the 90s? Like, do you know when? Did your ancestors come over with the slave trade or something like that? Is that?
Yeah. So slave trade and some of the other ones from England. I had another distant great grandfather. He came from France.
Okay.
And so and they either married into women from the tribe, or in some cases they had African slaves that they would impregnate and such. And so so it's kind of like a mix of a lot of things.
A very good friend of mine is very interested in Irish history, and she's Irish, and she was saying that as well as shipping everyone over from West Africa, they shipped a load of people from Ireland out to the colonies, which is one of the reasons why the Caribbean accent sounds so Irish. Yeah. But the men all died because they were really pale and they just couldn't survive in the sun. And the women, out working, and the women were mated. The Irish women were mated with the men, with the African men. And so you'll find loads of Caribbean people got Irish.
Yeah, exactly. And a lot of it's also. A lot of them were indentured servants as well, and so being here in the Americas and. Have
you got any Genghis Khan in you?
No.
I think everyone's got some Genghis Khan in them apparently, but.
No, I don't. So at your speech you talked about the portfolio, and you mentioned 10% gold.
15 actually.
15% gold.
Well, the quote I said was put 10% of your net worth in gold and hope it doesn't go up, which I thought was an old Wall Street saying. But if you Google that expression, the only person saying it is me. So I think I might have written it. I might have come up with it and thought it was an old Wall Street saying or something. I don't really know. But anyway, I don't think I was the first person I heard say it. But it's a very good wisdom. Put 10% of your net worth in gold and hope it doesn't go up. Because if it does go up, it means there are problems elsewhere.
Yeah, it's like chaos or something.
Yeah, and but I've developed this thing called the Dolce Far Niente, this portfolio, which is the do nothing portfolio. And the idea of that is you would reposition the portfolio maybe 2 or 3 times a year, but it's a portfolio that you don't need to be constantly looking at your screen, waiting for news on this and that company. And it's the inspiration for it was this thing called the cockroach portfolio. And the idea of the cockroach portfolio is cockroaches are these incredibly hardy creatures that can survive you can have a cockroach can survive in the tropics, it can survive in the Arctic, it can survive in the desert where there's no water, and it can survive underwater. You can even cut a cockroach's head off and it will survive for a little bit. And apparently cockroaches survived Hiroshima. They can survive nuclear fallout, and they predate the dinosaurs. So how good would it to have a portfolio that was that resilient? So it's a kind of mix between resilience and not having to do that much. And we have 15%. Like if you thought cockroaches were resilient, well, gold's even more resilient because gold's even older than cockroaches are. Gold is as old as the solar system. So there's a big allocation to gold. And that gold will be there long after you and I and humanity has destroyed itself. The gold will still be there. And I have a 15% to gold and 5% to Bitcoin, just because I think the risk with Bitcoin is not owning it, because its potential is so huge. Shall I carry on?
Just say, I wanted to ask just obviously this is, the inspiration was behind the cockroach portfolio. But did you have any personal experiences where you were watching your portfolio too much, or were you hearing this from retail investors, where they would either lose sleep watching their portfolio or something? Was there any stories like that behind inspiration as well?
Well, there's 2 things there. Firstly is I write a newsletter called The Flying Frisbee, and a lot of my subscribers, I talk to them a lot, and I know that it was something they wanted. They don't want to have to keep looking at their screen. But it's also my own experience, if you're not careful, some people want that, but if you're not careful, investment can just take over your whole life. And, if it becomes your sole livelihood, then fair enough. But, I've got other stuff I like doing, and I don't want to spend my whole life looking at, screens and so on. So I'm happy to maybe sacrifice a little bit of perhaps sometimes you overtrade and you look at your screen too much, you end up making, the more decisions you make, the more bad decisions you make. So the idea of this one is, if you don't want to, there's a big allocation to energy, both oil, gas, coal, and uranium, but that's not a permanent thing. Yeah. I think that's good for another 5 years or something, but you don't want to always own oil and gas. You don't want to always own uranium.
It's cyclical.
Yeah, exactly. But the time is right at the moment.
Mm-hmm. Yeah, definitely. And so you mentioned the risk. It's a risk not owning Bitcoin. Obviously, the technology is just fantastic. The humanitarian cases for it as well. Giving access to people who don't have access to banking or access to the S&P 500 and all those different things. So there's definitely a lot of potential there. And then you mentioned, energy. And so what's your take on energy and where do you see it?
Well, hey everyone, sorry for the break in action, but I have to let you know that I am now an affiliate with Miles Franklin. Miles Franklin has been a bullion dealer for over 30 years, and they provide some of the highest quality service to their clients, as well as fair pricing on bullion products. So purchasing bullion through Miles Franklin not only stores wealth for yourself, but you're also supporting this channel to continue to provide free educational material for retail investors and those who may not be aware of many financial concepts that I discuss on this channel. So you can get started by sending an email to info@milesfranklin.com or calling 952-929-7006. Be sure to let them know that Daryl Thomas or the Money Level Show sent you, and I will receive credit for your service. I thank you all for considering this. Now let's get back to the interview.
Well, even with all the movements to increase usage of solar and increase usage of wind, fossil fuel consumption is at all-time highs. It increases every year. And, you know, the green movement talks about wanting to stop fossil fuel use, but I don't believe that's actually what they want to do. They always say, you always get the hashtag smash capitalism. And they're not trying to stop fossil fuel use, they're trying to stop capitalism. And actually, the more sophisticated a society gets, the more energy it consumes. And also the better it gets at producing energy and the better it gets at consuming it too. It becomes more efficient and so on. And so if you look at the West now, you know, 100 years ago we were burning coal and there was coal going into the air and the fossil fuels we were burning were polluting and so on. And now it's all just, it's not perfect, but it's much better than it was. And I think we're not going to stop consuming energy. We're going to increase consuming energy. And we've had 10, 15 years of underinvestment in oil and gas, especially. I think gas is, you know, gas and nuclear are the two big clean ones. But anyway, there's been 10 years of underinvestment. And it's not just underinvestment. It's like, you know, some of these major oil companies have rebranded themselves as like green companies. They're that ashamed of investing in oil and gas. And yet, you know, there's a moral case for oil and gas because oil and gas enables, you know, lifts people out of poverty and it raises living standards and all the rest of it. So there's a never mind the moral argument, just the lack of underinvestment means, but the fact that demand remains high makes there a very strong investment case for oil, gas, coal now. And I think I can't see that changing for another 3, 4, 5 years. Yeah. I mean, you know, if we get another spike in the oil price, it goes to $200 or something. And if you look at the weighting of oil relative to the S&P, it's still low by historical standards.
It's like 4%, 5%.
Weighting of energy, yeah, it's really low.
Yeah, definitely. What intrigued you about uranium?
Well, uranium, again, nuclear is the answer. It's the greenest energy out there, cleanest. But I advocate owning uranium, the metal, over the miners, because if you look at, say, the 35 companies in Sprot's, in the uranium ETF, there's 2 or 3 parts of that are metal, and there's 2 or 3 that are producing, but, you know, 28 or 29 of them have no production. And they almost certainly won't be producing for another 10, 15 or 20 years. The capital required to get them producing, never mind the regulation, the regulatory hurdles, just mean that those companies are net drains on capital. Now, while the uranium price is going up, the perceived value of their deposits increases, but they are still net drains on capital. So it's much safer to own the metal. Now, I actually think there's a supply squeeze coming for the metal itself, in the West at least, because Kazakhstan is the world's largest producer, and it cannot get its uranium to the West. If it can't go through Russia, it can't go through Ukraine to the West. It can export its uranium to China, but China won't export it from there. China keeps all the uranium. So it can export it to China, fine, but it can't get to the West. And finally, it can't get its uranium to the south, it's Iran and Afghanistan. So Kazakh uranium can't get to market. And it's been using forward swaps and various other things to deal with deliveries and so on. Niger can't get its uranium they've had a big coup and that uranium's off supply. So I think the figure I read was 65% of uranium is off supply to the West. And we need it. And so I just think there's a supply squeeze in the metal coming. And you don't need to take the added risk of of buying a development play and taking on the company risk and taking on the geological risk and the fact that it's a drain on capital and all the rest of it. You just buy the metal. It's much, you might not make quite as much money if it all goes up. You might make more in the event of a proper metal supply squeeze, but on the downside, the risk's much lower. So I advocate owning the metal itself. And at the moment, I would put 5%. I think I have 10 or 15% to oil, gas and coal, but I would put 5% in physical uranium.
Okay. And then you have a certain percentage towards stocks or equities. So with equities, we have these growth to value ratios. We have there's times when liquidity is abundant. You get a lot of the tech companies and such like that tend to skyrocket. And then you have like the safe plays, whether that's like the healthcare industry or consumer staples and such. And so, with the percentage that's allocated to equities, are you looking at that in terms of like where we are in a cycle, or are you looking into tech companies like so?
Okay, so I put 35% of the portfolio in equities. And we had some emerging market, some Japan. Japan's in a bull market. I think you should be overweight small caps because small caps are cheap at the moment. Small caps go up by more than large caps do, but at the moment they're cheap. Private equity is very cheap. And within that equity portfolio, we have a very large allocation to the US, 35%. And you just need to buy an S&P tracker fund. The beauty of the S&P is those 500 companies rebalance all the time according to who's done best, so it's self-correcting. Now, in the UK, the way that ordinary people have got exposure to money supply growth has been by owning real estate. That's been the go-to investment. And our stock market hasn't done anything like as well as yours. In the US, people go to the S&P. They put their money in the S&P. So there's a tacit protection there of the S&P because a government doesn't want the S&P to fall by too much because it means it won't get re-elected. Mm-hmm. And it's the go-to place for American investment capital. It's self-correcting, so the best companies are constantly in there. And America is still the greatest country in the world. It's where everyone wants to go. It's where it's if you look at international talent, you said to anyone anywhere in the world, you could go and live anywhere like a king. Where do you want to go? They'll all go choose America. So it still attracts the most talent. I'm not saying it hasn't got problems, it does, but it is still a phenomenal country. And the S&P, effectively you're leveraging all that talent. So I know the S&P is more expensive than other indices. There's better value to be had. You could say it's over dependent on those 7 tech stocks, and they're all looking a bit hissy. The air's coming out of the bubble and all that, but it's still the best one. So we have a large allocation to it.
Okay. And then you mentioned bonds. So you have short-term treasuries. You have 10-year, 20-year, 30-year.
I recommend 20% allocation to bonds, or I can't remember if it's 15 or 20, because...
Are you thinking long-term or short-term? Yeah, I'll let you get to that.
Just because of the wealth preservation aspect of bonds. I actually think government bonds are immoral because I'm a big libertarian in my politics, and I think government creates more problems than it solves, and I'm subscribed to that government is the problem. And if you buy bonds, you are lending the government money, so you are enabling them. So I think there's a strong moral case not to own any bonds. So in my own portfolio, I do not own a single bond. However, I do have 2 investment trusts that I've invested in, which do invest in bonds. But in terms of, I never really understood bonds. I'm not very good on them. So I've just got money managers, the heads of those investment trusts, doing it for me. And so those are called wealth preservation trusts. So that's how I get exposure to bonds. But I'm ambivalent about them.
Yeah. I bet. It's me. I'm in short-term treasuries, just because it's unclear like where inflation is going to go, and then if you lock the money away for 30 years at 4 or 5%, and then inflation goes higher or interest rates go higher, then you're technically getting a negative interest rate or whatnot, and so that's kind of like some of the risks.
Yeah, that's a problem. But the Fed's rates are now what, 5%? Is it? But Trueflation says inflation's actually at 2%, which means rates can come down. So if you've got high yielding bonds and rates are coming down, they should do okay. I don't know where inflation's going. I can't pretend to tell you.
Definitely. Does your portfolio model, does it factor in anything like the Great Reset or the fourth turning or like all these conflicts that are happening? I mean, because you want to sit back and just like, okay, I don't have to look at it. So it's supposed to rebalance in some way, whether that's gold goes up because of whatever's happening versus stocks and such and so.
I guess Bitcoin and gold are your hedge against all that, and energy stocks as well. What's quite interesting is there's quite a strong left-wing conspiracy theory that there is a plan afoot to make gold money again. Like that's a lot of people believe there is a right-wing conspiracy to make, and a lot of right-wingers want gold to be money, and libertarians do, I do, but there's a conspiracy among the liberal left that there is an actual plan afoot to make gold money, and it will happen. I'm not sure about that. It might happen out of necessity, but we'll see.
Mm-hmm. That's good. Well, thank you for coming on. Appreciate you and your time. Where can people find more about your newsletter and such?
Thank you very much for having me. It's been fun. And my newsletter is called The Flying Frisbee, and you can find it at flyingfrisbee.com.